All right. We have some catching up to do. For everyone out there on the edge of their seats waiting to see how this saga between Hindenburg Research and Icahn Enterprises will continue, don't worry, I've got your back. I was out this weekend. I was actually kind of sick, and I got sick out of the blue. I don't know what it was, but maybe it's because I gloated all about last week about shorting Icahn Enterprises and making a ton of money. Carl Icahn must have chose to smite me down himself from the heavens. With all jokes aside, last Friday I did leave you with a video about how this federal investigation opened up about Icahn Enterprises, which was spurred by the reporting done by Hindenburg Research. And if you don't know who Hindenburg is, if you haven't seen my video, they're an activist short-selling investment firm which focuses on exposing corruption in overvalued companies. Past victims of Hindenburg have been Block, Adani, Mullen, DraftKings, Lordstown Motors, Clover, and Nikola. And some of the speculations outlined in the reports don't necessarily allegate fraud. I just want to get that across. They just allegate that these companies are overvalued, and there are some sketchy business tactics going underway, potentially. But many concerns have actually been raised against Hindenburg and its founder, Nathan Anderson, for being an active short seller. That means that his reports are inextricably linked to his short selling behavior. Many accusations are that he takes a short position first, releases a devastating report, and then profits huge when the stock tanks. And I see the criticism. I see it out there that Hindenburg is, maybe not doing the most ethical thing when they release these reports for their own benefit. However, Hindenburg was actually totally right about Nikola, for instance, calling it, quote, an intricate fraud built on dozens of lies over the course of its founder and executive chairman Trevor Milton's career, end quote. Facts came to light finally, and Trevor Milton currently awaits sentencing on 3 fraud convictions connected to Nikola. So while people, judge and say, oh, he's short selling, there's an interest there, some of this research that he's done has actually been very good and has actually, come out to be true. And I tend to trust when the allegations are laid out, like in Hindenburg style, and especially when they come to light, there are federal investigations and they come to light later to be true. So when I first saw the then 15% dividend yield of Icahn Enterprises, I thought that was absolutely insane. I mean, it's kind of known in the world of dividend stocks to expect closer to 3 to 5% dividend yield. So I was curious, how is IEP paying a 15% dividend yield? And since the report dropping, they actually currently right now pay a 23% dividend yield, which just seems mind-blowing to me. After all, some blue chip stock market leaders set the pace. AT&T pays 6.7%, IBM pays 5.3%, and Chevron pays 3.9%. But I wasn't comparing apples to apples. What I hadn't covered in my initial analysis is what makes IEP different in the stock market. See, IEP isn't a normal stock which trades shares of ownership. They are what is known as a master limited partnership with investment units instead of shares. And the name of the game isn't the same with master limited partnerships as it is with stocks. Instead of focusing on growing the company like Tesla does, MLPs care more about paying out cash to its unit holders every quarter in the form of dividends. So I gave you some dividend yields for some stocks. What about MLPs? Well, EPD pays 7.6%. WLKP pays 8.8%. DKL pays 9.7%. You see what I mean? The yields are higher. Oh, and when looking up different MLPs, I found UAN, which is offering a staggering 40% dividend. I mean, look, I really don't know what's going on there, but that does seem sketchy to me. That doesn't seem, that seems improbably high. 40%, that's crazy. Okay, so in this video, we'll talk more about what MLPs are. And then in tonight's video, which we're going to release in a few hours, we'll get into the more recent news with Icahn Enterprises. So make sure to hit that notification bell to know exactly when part 2 of this video comes out. Okay, with that said, we're going to get back and get into the video. Master limited partnerships are types of limited partnerships that are publicly traded on national securities exchanges. It basically combines the tax benefits of a limited partnership with the liquidity of a common stock trading on the open market. Typically, MLPs have 2 types of partners: general partners who handle daily operations and limited partners who are essentially investors. These limited partners invest capital by the MLP by buying shares, and in return they receive cash from the MLP's operational profits. So practically this works like me buying their shares or buying their units on an open market and then receiving that dividend every quarter. That could suppose why, the dividend yield seems so much higher than that of stocks, because they have fundamentally different goals with their company. MLPs usually concentrate on activities related to natural resources such as oil, gas, coal, and timber, as well as certain methods of commodity transportation. In fact, they actually have to. The Tax Reform Act of 1986 and the Revenue Act of 1987 outlined that to qualify to be a publicly traded MLP, a firm must earn 90% of its income through activities or interest relating to natural resources, energy, commodities, or real estate. That was a lot of words, but essentially, they're required and mandated to be in these certain industries that essentially have, high profits, which makes sense. IP actually began as American Real Estate Partners, which was founded in 1987 and now has diversified its portfolio to 7 operating segments: investment, energy, automotive, food packaging, home fashion, and pharma. As of December 31st, 2022, they had $28 billion of assets. MLPs tend to generate higher yields than bonds and stocks, due in part to the favorable tax structure. How the MLP itself is considered a pass-through entity for tax purposes, meaning that it's not subject to corporate taxation. Instead, the distributions to unit holders are taxed. And so, when I first published my video on this whole debacle, I didn't really know what MLPs were, and I didn't know how they differed from stocks. So I wanted to make this video right here to reconcile with that, as we are always learning on this channel. Of course, that's my goal. So how is IEP now paying a 23% dividend? I think that's absolutely insane, and I want to delve into the actual numbers. So my first response, if I were taking a defensive position, is that the dividend is based on the dollar amount set, not the value of the unit or share price. So the dollar amount per unit IEP pays is currently $8 or $2 per quarter. IEP has been paying a $2 dividend for 18 quarters, or since March 8th, 2019. That would seem pretty sustainable to me. But the offensive side to me would say, but wait, IEP isn't a profitable company, are they? In fact, the net income that they just reported for quarter 1 of 2023 is negative $265 million, a 183% decline year over year. Startling. Total revenue for the quarter ending March 31st, 2023 was $2.6 billion, which is a 35% decline year over year. Okay, so let's go back and see what their price was March 2019 and see what their profitability was back then too. IEP was sitting around $70 a share back then, which at that price would put the dividend yield at 11.4%. So the question is, well, why are people selling the stock in the long run? In the long term, wouldn't you kind of want to reconcile with that nice, cushy 11% dividend? Remember, selling pushes the price down, but it also pushes the percent yield up. So let's compare financials then and now. Let me transition us to our screen here. I wanted to look at Icahn IP financial fundamentals. The most recent period, total revenue $14 billion per year. In 2019, it was only $10 billion. Cost of revenue now $11.6 billion, then $8.2 billion. So gross profit now $2.5 billion. Gross profit then $2.2 billion. Okay, so we're growing a little bit in gross profit. So sales, general admin stay the same. We've got these non-recurring items, which seem so small and insignificant. We've got operating income. So then operating income was $260 million. Now operating income is $600 million. Additional expense items then were $1.3 billion. Now they're only $25 million. Earnings before interest and tax, this was negative $1 billion. This time now we're positive, up to the upside, $577 million. interest expenses, expense from interest, are basically all of the profits this year, 568. So earnings before tax is only $9 million. Now, I want to delve deeper into the financial statements and figure out, okay, let's actually see in depth of what's going on with this company. But for now, we can just analyze, a high level overview. So we can see that, okay, after equity earnings loss, unconsolidated subsidiary, how can I figure out that word, was 158 million. Net income, continued operations, negative 183. So the net income for the ending period was negative 183 million. And then the net income at the end of the year was negative $1 billion. So we can just see a little bit. It looks like over this 4-year period, at least, Icahn Enterprises is gaining traction. And of course, they're gaining a lot more revenue, but they're also, gaining a little bit closer towards profitability, which I think is always a good sign for a company that's paying dividends. Because right now, in one of the allegations that Hindenburg was, making towards Icahn Enterprises is that they're not profitable. Basically, these shares or the dividends are coming from Icahn himself, or they're coming from issuing new shares, new units of the corporation, which remains to be seen. There's a federal investigation, as I mentioned. But yeah, it is concerning if they're paying, $2 per share when their earnings per share is negative 20 cents. I mean, that is not it's obviously not sustainable for the long term. Okay, my takeaways from this video, I definitely want to learn more about the MLPs that are out there. Like UAN, for instance, 40% dividend, it does not sound reasonable at all. But for the regular MLPs, I want to know actually what's going on and how does this industry look. I don't really know much about natural resources. I don't know much about MLPs. So I myself am not confident, and I don't know if Icahn Enterprises is significantly overvalued or not. It might not be significantly overvalued like Hindenburg alleges. That's what we're going to be looking at in the future. As well, I want to look in depth into Icahn's financial reports to figure out more details on this whole thing. That will be for another future video as well. But at 8 p.m. tonight, I will be releasing the next video covering the most breaking news on the situation, where I'm going to be looking more at news, publicity, and what's going on right now. So for now, I'll see you then. Thanks everyone for watching this video. I wanted to lay the groundwork so that we could get to know a little bit about master limited partnerships, how they trade like stocks, but they aren't stocks, before we continue following the case. Okay, everybody, take care until the next one. See you later. Bye.